What's up YouTube? In this video I'll show you how I doubled my money in 60 hours or something. A little disclaimer, I traded with very high leverage, and if you just start this strategy you probably just take a proper risk management and maybe a lower leverage. So these are the 4 steps to double your money. Step 1 is the higher time frame, no trading zone. This means that you have highs and lows on the higher time frame. So if I draw them really quickly, you can take this as the low, this is the high, this is, and so on. So at these zones, so you have the high, over here you don't trade, over here you don't trade. You can trade, but these are not the optimal points to trade. And over here as well. So up until the 4 hours, I think, some sort. Over here as well. So at the low of important higher time frame levels, it's not optimal to take the strategy. But if you look, in these zones we don't trade because over here you could expect some sort of a reversal. And yeah, that's basically it. So if you look at the higher time frame highs and lows, you can choose to decide not to trade in these zones. It's not necessary, but if you want a higher win rate, you wouldn't do it because over here it's not that optimal. And then step 2, the lower time frame. At the lower time frame, you can decide which way you want to go. So at the lower time frame, you decide what trend you're trading in. So yeah, it's really easy to see now, but now it's a downtrend. So we keep on shorting until you tap out one of the most important highs. So this is the high. If you tap this one out, you would expect a reversal, and you take a higher low, you would expect something like that. So you decide to create a range. You have this high and you have this low. But since we're in a downtrend, the low is not that important. But we're almost here, so basically on the lower time frame you decide your trend, and you are only, in my strategy I only trade with the trend. So now I'm only looking for shorts, and if we go even lower then on the 1 minute, we go to step 3, which is the 1 minute entry and stop loss. The 1 minute entry and stop loss, so you have the same price going on again on the 1 minute. You have higher highs and higher lows. So very quickly, this would be the higher high and higher low. And if we go further, you can take your entry over here at the previous impulse. This is the impulse you're looking at. Actually, this is the impulse you're looking at. So here you are going to take your entry and stop loss. So this would be the first trade. Over here you have a box. You're just going to take out the best highs and lows, and then you have one over here. And then you have one over here. These are the points you're going to take an entry. And your stop loss is just going to be above the previous high. So this would be the first entry. So your entry is based upon the previous range on the 1 minute. So this is your first range, another range, another range. I think it speaks for itself, but if you use a strategy a lot, you can see that the best thing to do is you take a range where there is no price. So over here there are a lot of red candles, and over here as well. So these are the points where you want to take an entry. If the trade is already gone, so like over here it's more difficult because the price has already tested the box. So if you look at it real quickly, so this would be a box as well, over from here till here, because this is your low and this is your high. So in between here somewhere you would want to take a short, but the box is really big and it's already been tested. So the trade is gone. So you wouldn't, it could work if you take a short over here, but let's just keep that one out. And then over here maybe, it doesn't even matter because the price is not there yet, but if you look at the first box, it would be a trade like this. So depending if you're aggressive or defensive, we will be somewhere in the middle. This would be your trade with the stop loss above the high a little bit. This would be your trade, and then so depending on whether you're aggressive or defensive is just if you're more above in the box, you're defensive, and if you go lower and lower, you get more aggressive. It speaks for itself. And then the other thing is the take profit. Where are you going to take profit? So if you look at the take profit, you have three things you can do. You can take a take profit at, you can take an aggressive take profit, you can take a defensive, or you can trade the plan. So an aggressive take profit will be a failure. So you would expect a lower low because you're trading in a downtrend. And so this would be the plan. You go to the next step. So to visualize it, over here you have a low, you have a high, and you have something like this. So if you want to trade the plan, this would be your take profit. So you want to sit at the next box, the next low, because you have a low, and you expect to lose the low. This is the plan, so this would have worked, but it would have taken a much longer time. The next entry would be the defensive, the aggressive one. And that will be around here. So yeah, you have the same entry. So this would be the aggressive one because you want to have a take profit, you want to get the trade done. So you say, even though you expect a lower low, you are going to say like, I'm going to take a take profit over here, it's been enough. And yeah, that would have worked out as well on this trade. And then you have the aggressive one, which is this one. It would be on top of this range, somewhere over here. And then you would have get out really quickly. So if you look at the trades, this is 3R, the other ones were 4 and 8. So if you're scalping, you want to have a big RR because if you take an entry and you get stopped out, you lose a lot of money just on fees. So if you look at another example, this is already used up, so we can't take a trade if there's no price yet. But if you look in the past, we are going to trade on this impulse down. So if we zoom in only to look for an entry, so we've take out the price over here. I don't know what happened here, so this would be the first entry. So you look at where you want to take an entry. So over here you would have wanted to take it. Here is not a good point for an entry because it's already been tested some sort of. So this is not nice. If you want to take an entry, you want to see like this. A couple of red candles, over here a couple of red candles. Some sort of a void, but I've explained it in a previous video. So this would be an entry as well. And yeah, this one I think is the best. Maybe take the low. Some sort of this. So if you look at here, oh, damn. So if you look at it, so this would be the first trade, depending on whether you want to take an aggressive entry or a defensive one. Would be a defensive one would have been here, so you wouldn't have got filled at the top of the range. But if you take, yeah, just take the middle for the sake of the video. With experience, you'll find your way if you want to be aggressive or defensive. And over here, just the middle of everything. somewhere over here. So if you look at the first trade, this would be the entry. Depending on whether you're aggressive or defensive, you would have got filled or not. And then you have the next step is to decide whether you want an aggressive take profit or a defensive one. So over here, a defensive one would have been nice. So if you look at the lower time frame trend, you have a low, a high, a higher low, and yeah, you can see here. So this would be the really defensive one, just to get out of the trade. So this would have worked. And if you want to get more aggressive, you would have been here. And if you were trading the plan, your next take profit would have been over here. And yeah, that's basically the trade. So deciding on whether you want to take an aggressive, defensive, or you want to trade the plan, you take a take profit. So with experience, you'll find your way into that. So that was the first trade. This is the second one. Yeah, the same story over and over again, but whether you take defensive or an aggressive entry, you would have got filled or not. So if you would have got in the middle, you would have got filled over here. And this would be a defensive, this would be aggressive, and this would be your trade plan. Maybe even this one. But this one wouldn't have worked. And then we go to the next one, which is in the middle as well. Same story again, aggressive, defensive, decide your entry. And then you have the aggressive take profit would be here somewhere. And then you have the next level, which is here. And then if you want to lose low, you would be maybe underneath this one. So on this trade, you would have got a nice risk reward. So that's basically the strategy I used for my challenge. It's very easy, very mechanical, so you don't have to think that much. And yeah, you just have to play with the aggressive and the defensive part. So if you use a strategy a long time, you'll find your way. So if you have a big impulse like this, maybe you take a more aggressive one, because if you have a big impulse, you expect a big drop. So I explained it in the Void video. I have some lessons from a couple of years ago, I think. So if you watch those videos as well, you get more context. And that's basically it. So yeah, thanks a lot for watching, and laters.